It has been 14 days since Cardano's ADA hit its new bear market low. In this video, we're going to be jumping down into the technical analysis on ADA, taking a look at what's been going on since and where I think things could potentially be heading next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's make a start with this video though. Let's jump right down into the world of Cardano and review what's going on with the price action of ADA. So here we have ADA paired up with USDT. We're using BitGet Spot Exchange, and this is the 1 day time frame. And as you can kind of see, we hit the new bear market low over here on the 10th of June, which is very strange for everyone who's calling it a bull market, because we can't be in a bull market and set new bear market lows at the same time. Those two things kind of contradict each other. Now, obviously, a lot of people are more bullish on the price action of Bitcoin right now, and they kind of forget about the fact that many, if not most, altcoins have gone down into a new bear market low within the last couple of weeks or so. And of course, many that are tracking and looking to set new bear market lows in the coming days and weeks as well. There's a lot of bearishness actually in the price action and the price charts, but of course, Bitcoin seems to be thinking otherwise. Now, this is okay. This is not actually that unusual either. Many of the altcoins actually do go down into new bear market lows after Bitcoin's already hit its low. So it's possible that Bitcoin's really kind of bottomed out, and many of these altcoins are still tracking down as expected. And it's also possible, because I don't think we can rule it out just yet, that Bitcoin goes back into a new lower low. And if you want more details on that, then why not check out the Bitcoin video that I put out earlier today. But let's talk about Cardano. Okay, so on the 10th of June, Cardano ADA hits a low of 22.0439, which is very close to my original bear market low expectation from about a year ago at 22.23 cents. So we come down to slightly lower. We also almost hit my target back in December 2022 as well, hovering around the 23 cent. Now, obviously, my expectations with 22.23 from way back early 2022 and into kind of late 2022 isn't really now valid. I think we have to come down deeper, unfortunately. This is something that isn't something that I wanted to kind of see or to say. You know, I was hoping that 22.23 would hold, and you know, for the most part, 23 was looking really strong for a long period of time. But for the most part, you know, it is what it is. The data and the structures are suggesting that we are looking at deeper retracements than maybe that we want for Cardano. With that being said, we've seen the SEC suing Binance US for sales of ADA and claiming that ADA sales that Binance was making or were making is basically a sale of a security. Now, obviously, I've been through this already. It's very illogical, and I think there's actually a court ruling already in existence that says that sales on the secondary market cannot be that of securities. So I'm very confused as to kind of how Binance.US was able to sell Cardano ADA as a security when the ICO happened in Japan, and was more of a fair launch over there. And although, you know, US investors could of course navigate over there and could self-accreditize themselves as high net worth individuals or accredited investors and so forth and invest in it, yeah, I don't see how Binance.US were involved in that. So anyway, nonetheless, the noise that's going on in the space has had an impact on price action. That's kind of brought us down into these lows. These lows, of course, are not out of the woodwork just yet. I think we've still got some more, unfortunately, to kind of go. So here we can see a potential move up higher. We kind of have rallied up here in the last couple of days, kind of hovering around, and unfortunately unable to get a close position above the 0.618 fib level at 29.863. We actually wicked up slightly higher, more towards the 702. The 702 is a strange number in itself that cryptocurrency seems to really resonate well with. That comes in at 30.5533 cent for Cardano's ADA. And you can see over on the 22nd of June that we had a high of 30.4938. Okay, and then we started to kind of just consolidate down a little bit. There's still room to the upside. Ultimately, our target range is actually the equilibrium, just a little bit higher in the price chart, really kind of talking coming up towards 31.283, and we are looking for the price action actually going up a little bit higher, more towards 33.55 at this point, with major resistance really coming in up on the higher side at the 34.89. That's kind of where I think we're likely to see this kind of come to a close. Now, there's a structure here that we are following, which is an impulsive movement structure. However, if we do cross up higher than 34.8975, then we're going to invalidate that idea. Okay, now the other thing that's potentially on the horizon here is actually a double zigzag pattern, which is the one that I kind of prefer a little bit more than the impulsive structure. So for the impulsive structure to work, we have to look at this area over here as an extension in the fifth wave movement, and then a move down in a wave 3, up for a wave 4, and so forth, right? But as a zigzag pattern, it actually makes a little bit more sense, right? If we kind of see that as a zigzag there, and then we'd have to look at this one as a potential zigzag pattern as well, taking us down, of course, into new bear market lows. Okay, so there's a few things to kind of consider here. Now, we'll know more over the next kind of few days or so as this kind of materializes, because it is possible that that's a wave 1, 2, 3, up here for 4 and down into 5, right? But it's not looking overly great in that particular manner. So for me, I think a double zigzag would basically fit this structure out a little bit better. We are in a bearish structure, flipping from a bullish one into this bearish one with a bit of a sell-off occurring. But for the most part, that's kind of where that one sits on our daily time frame. Now, if I bring up 𝗕𝗘𝗪𝗔𝗥𝗘, okay, and we take a look at our hourly chart, we can see the fair value gaps as well that we've been kind of leaving behind as we pushed up. We can see some that consolidated in these ranges and kind of filled out the gaps right away. We filled out this one over here, for example, very quickly. And what I do is I'm going to just draw them a little bit backwards like that, so you can see that they are complete. That, or I change the color. I might just change the color. It might make it a little bit easier if I do change the color. So I'm going to make them yellow, and I'll just make this one yellow as well, so we know that they're done. Okay, which means we've still got these ones still on the horizon. For those who do not know, fair value gaps are created from the imbalances of the order books. So essentially, if we see gaps like this, where we see a gap between 24.3386 and 24.7620, and that basically meant that there was a large buy orders that were coming in. They couldn't fulfill the buy order at the desired price of 24.3386, so price has to move up to find the sellers. It goes up to 24.7620. Might not sound like a lot, but if you're placing a large enough order to move the market, you're actually costing yourself a lot of money when that happens. So the gap gets left behind. Price wants to kind of go back because that particular individual isn't going to continue paying a higher price, or at least they shouldn't be paying a higher price. They would kind of stop their purchasing, wait for price to cool off, and liquidity go back to where it wasn't. And unfortunately, in a manipulated market, you see fair value gaps getting stacked up. Now we see a couple getting stacked up here. And again, we can see more and more kind of going up and up and up and up here. At some point, though, we are likely to see a retracement. It's not guaranteed, but it's something that I would expect, which would be obviously that we are coming down into a new bear market low on Cardano's ADA. And as such, that's a fantastic opportunity for accumulation, but also filling out all those fair value gaps as well. Okay, so as you can kind of see here on 𝗕𝗘𝗪𝗔𝗥𝗘 with the trading view, you've got all the fair value gaps getting stacked up. It's from the imbalances there on the order books. And at this point, I think it's worth noting, if you haven't yet checked out 𝗕𝗘𝗪𝗔𝗥𝗘, check it out. Affiliate link is in the description down below. It is my go-to platform for all leverage trading at the moment, and about 90 to 95% of all my spot trading is also done on 𝗕𝗘𝗪𝗔𝗥𝗘. I think it's a fantastic platform, which is why I talk about it so much. And if you haven't already checked it out, there's an affiliate link in the description below. And if you do use that link, you can take advantage of some of the fantastic offers that are out there, such as $8,000 in rewards for depositing and trading on the platform. More details to be found in our Discord and on the link in the description down below, all the way through to trading competitions and many other incentives that 𝗕𝗘𝗪𝗔𝗥𝗘 are doing. If you haven't already checked it out, as I said, affiliate link is in the description below. Let's jump back down into the charts. Okay, so as we can kind of see, this big kind of sell-off occurring here. Now, if I zoom out of this and we start paying attention to the big bear market that was, we can see some interesting things that have been unfolding. Now we know that there's a lot of zigzag patterns that were occurring as we come down towards 23.92, right? And this is what we were hoping was going to hold. And we saw this really nice rapid movement to the upside, right? And you know, very similar to kind of what you're seeing with Bitcoin at the moment. And of course, you know, you can come down into these lows. Now up here we can know that it's just a 3-wave corrective pattern in itself, and we also see a 3-wave corrective pattern right in here as well, right? And so we've seen a couple of these corrections occur over the months, right? And we can kind of see them time and time again. And this is actually a large one, right? We saw this large movement. Okay, it took us from December all the way through to April, right? 4 months of pushing upwards here, before we actually come back down, right? And from April all the way through to June. So it took a couple of months before we went down into that new low. Okay, we see also on many other altcoins that kind of have rallied up quite significantly, haven't been able to hold those highs, and that's because there is insufficient demand. I keep talking about this, and I don't think there's many people in the YouTube comment section that seem to fully understand it, although at least the minority that seem to be really vocal about it. Essentially, we can't be in a bullish market if the very definition of the bullish market isn't there, which is that volume or demand is outpacing that of the supply. And at the moment, that is not the case, right? There is very little demand and there is actually a lot of supply. And as such, you see price action negatively in the price charts, right? These are fundamental basics. Everything, no matter how complicated you want to make it, comes down to supply and demand. Everything comes down to supply and demand. So really all you need to focus on is supply and demand, right? And so if there is insufficient demand and decent supply, price will go down. And if there is an increase in demand and a shortage of supply, price will go up, right? And it's really that simple. And for the case of Cardano, we have lots of really positive things for the future, right? We know why that supply is likely to get squeezed and to decrease through all the dApps that are being built on the ecosystem. For the fact that DeFi is going to require a lot of ADA to be locked up, for example. All these shocks to the supply with an increase in demand through new use cases is going to take that price action up, right? But we are not there yet. Instead, we are just looking at cumulative phases where we're likely to enjoy some cheaper prices in ADA. Now, I suspect that we're going to be revisiting 18, possibly as low as 15 cent in the future. And we're looking at consolidation. Where are these ranges, right? At the moment, we've come down here and there isn't really any reason for this to have stopped at this particular level. And instead, you know, we need to be thinking 18 cent down to the 15 cent. This is an area that I think has a higher chance of finding support levels within it. So let me just draw this in right about here. And so you can see between 15.46 and 18.3 is an interesting range. Now we'll know more once this structure starts to form out, and we'll have a much more accurate kind of way of looking at this. But for now, my expectations are that we are not done with our bear market lows here for ADA, and we do have further to the downside to go. But let me know what your thoughts are in the comments below. I'm going to leave this video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done out the way, guys, have a fantastic day, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.